And a lot of this big technology is doing pretty well today, but one day makes just one day. Why are these companies making these moves now? Is it because, well, I guess interest rates are higher and they have to focus more on their knitting?
Absolutely. The market no longer has tolerance for like the runaway spending and, the slimmer margins that these companies had by giving the perks, sorry, Contessa, but by printing the swag, making those bobblehead dolls. Right now, we're in an economy where it's all about profit. That means the companies need to focus on the businesses that are printing cash, and they have much less leeway to work on those businesses that, maybe somewhere down the line would end up netting something for investors, but just weren't producing right now. And that's why we see Google saying we're going to focus on our money-making businesses, and we see Snap saying, you know what, that selfie drone, we didn't really need that. Netflix saying those bobblehead dolls, maybe we actually could take that money and use it on content. And I think this is ultimately a very good focusing moment for the big tech companies that we're talking about.
But interestingly, even on content, you had Netflix saying, we're going to hold back or hold steady what we're investing in content creation, in movies and television series. Not only that, but they're going to look again at what they're spending on cloud computing and their well-known partnership with Amazon. Could this have trickle-down effects for other tech companies?
Absolutely. A lot of the tech companies that we're talking about are platforms. They're companies that other companies build their businesses off of. The example that you give with Netflix is perfect. If Netflix draws down its cloud computing spend, same with Snap, by the way. Snap has a multi-billion-dollar cloud computing spend, every year. So if they draw those down, that ends up hitting people like Google or companies like Google, companies like Amazon. This is what we're seeing as the tip of the iceberg. Companies all the way down in the economy are also looking at places to cut. That being said, cloud is, a fundamental basic part of the digital economy. It's not going away, but it could start growing a little bit slower than it was.
You seem to be saying, Alex, that these are the moves of mature managements making wise decisions in light of economic changes and changes in the monetary landscape and so forth. If they turn out to be correct, how soon would you expect to see these moves start to show up in higher stock prices and higher profits?
Well, look, Tyler, I think that these companies have been a beneficiary of the macro environment, and now they're getting hit by the macro environment. There's only so much they can control in these moments, right? You look at the last few years where the Qs were up, 39, 48% in 2020, 27% last year. They, when it comes to the stock price, they ride these waves, and now they're being hit harder because the interest rates are going up, and that ultimately is going to hit a tech company, more often. I don't think that they can flip the business overnight. I don't think they can go from being long-term spenders to short-term focus immediately. We look at these things in 3, 4, 5-year increments. So I do expect it's going to be a tough ride for these companies for the next little while, for sure.